Welcome to the World Indices Speed webinar for Friday, the 8th of May 2015. Did you know that yesterday was the anniversary of the flash crash? ? In other words, 5 years ago, or was it 2011? Anyway, one of those times there was a flash crash and it was the anniversary of it yesterday, full stop, me line. So our little bear has become a little babyer bear, full stop, me line. And Mark sent me some information yesterday, which was helpful in terms of timing. Full stop, me line. Thank you, Mark. So we also saw the E-mini S&P reached our target at 2060 and then rallied from there, full stop, me line. It washed down last night in European time and took out a few stops below 2060, gave people an opportunity to buy with a wider stop, and has rallied since, full stop, me line. Now the question is this really a rally? ? What we are looking at is the 30-year bond futures. And we can see that the 30-year bond futures are resting on, and at least rested on, the old tops back at 153 and 11/30 seconds, full stop, me line. You remember I had a target at 153 and that locked in. Be a 38.2% retracement of something else, full stop, me line. There is still a bigger target at 151 and 29/30 seconds, full stop, me line. And it seems like a bit of a reversal day, full stop, me line. Now we have to factor in the fact that this as a coupon change, so the actual 153 was not the same as 153 and 11/30 seconds. So there is a possibility that the bonds have found a bottom of sorts for a rally towards maybe 162, maybe 158, full stop, me line. That should help the equities markets a little bit, full stop, me line. So the question is, it's rallying at the moment. During May, can we get a strong rally? Dow Jones Industrial Transportation Average, new line. The Dow Transports had a rally yesterday. Volume was okay. I guess there's more volume to report, but really it's still within the range. It has not broken down. It is not broken up, full stop, me line. Usually when you get a 38.2% retracement of this sort, you get a stronger rally than we are seeing. So I am still nervous about this index if it cracks below 85.50, full stop new line. So at the moment, we might have a wandering, meandering rally back up to 90.11, full stop new line. Dow Jones Industrial Average, new line. We see a rally, we see an inside day. Comma, surely if this was a bull run tearaway market, it would have rallied through the old highs, full stop new line. Yesterday and had very strong volume, question mark. I'm not seeing that, full stop new line. So we still have an extreme element of doubt. Maybe things change above 18,091 or 18,100 more accurately, full stop new line. What we have seen is its return to the moving averages and another close lower. Tomorrow we'll put the 5 period below the 30 period, which would make it a little bit negative, full stop new line. The swing is still down, and a break below 17,800 would worry people looking for 17,515, full stop new line. S&P 500 cash index, new line. The S&P 500 cash index really gave us no excitement at all. It's still on negative watch, but not running away. Again, a break below yesterday's low at 2075 would indicate a rundown at 2036, full stop new line. Currently, the rally, if it comes, would be at best described as 2000 or 2011, full stop new line. It's still not giving us any real joy to the top side or real excitement to the downside either, full stop new line. NASDAQ, new line. Now this is the one that is worrying me the most, full stop new line. It hasn't even bothered to have a rally. In fact, it slipped a cog. on this data, but the data is wrong. It does say we can have a little bit of a rally into Wednesday, full stop, new line. Tonight is non-farm payrolls. So the NASDAQ is not as bad as my other chart says. But again, it's still not that inspiring, full stop, new line. When we turn to have a look at the cloud, we see it's a little bit better than the data would suggest, full stop, new line. So if you want to go long, you can go long with the close. Stop close only at 43.60. And that would be on a break above 44.20, full stop, new line. E-mini S&P looks virtually the same. A bit stronger than the NASDAQ, and the stop loss would be at 20. $70 stop close only if you are buying this, full stop, new line. Dow Jones Industrial Average, new line. I guess its stop needs to be on a close below 17,850, full stop, new line. A few of the indicators are rolling over on the Dow. It needs a little bit, they all need a little bit of a shot in the arm, full stop, new line. Mini Dow, new line. That needs a stop below 17,800 on a close basis, full stop, new line. Volatility index, the VIX, new line. Had a bit of an inside day. You would think if they really think that volatility is going to go up, they would have gone after it. And if they really thought that the market was going to go back up, they would have driven this down, full stop, new line. So at the moment, volatility could start to trend quite easily, full stop, new line. So we're still in a range. We still have no clear guidance as to what is going on, other than to say there is a sell in May and go away, and the dominant forecasting cycles are for up, full stop, new line. As a result, if you feel like buying dips, it's okay with a decent stop loss. Not too far away, but pick your levels. If you want to buy dips in the S&P, we're going to close out our PHG trade and take some profit. Full stop, new line. At 2083, and we will re-establish the position at 2083, and we will re-establish the position at 2100 with a stop above 2111. Full stop, new line. Is there an echo here? VXX.ETF, VXX.ETF, new line. We are still long the VXX.ETF, and what I suggest we do is to run a stop loss at $20.66 and cross our fingers and hope that non-farm payrolls is explosive tonight. I don't get what's going on with these orders, but it looks as if we are out. And we're still waiting for dips. Sorry about the order sheets. They don't look really readable either, do they? TBT.ETF, new line. We took 1/4 profit, market on open yesterday, or at 46.83. We will leave our stop loss as is, full stop new line. DRYS.ETF, new line. This has yet again disappointed us, and we're not yet stopped out on it, but we may well be at the end of the day tonight, full stop new line. Luckily, it's only 1/3, but still, it's not that much fun. GDX.ETF, new line. This fell off a little bit, but closed a little bit better than it's open, and so there's no real information, full stop new line. Gold fell off a little bit, and it still is annoying, full stop new line. Yes, Mark, if it does break up again, it will be higher swing bottom on the daily. And also, it's actually long at the moment too, so we can go in on the break up. You are quite right. We will do that. We may be stopped out first, however, full stop new line. So what we will do is we'll buy a break above 75 cents, and our stop loss will become 67 cents stop close only, or 65 cents price stop. German DAX, new line. It did get down to a little bit below the target area and has had a little bit of a rally. You would probably think that this section would be complete on a shorter time frame, and a rally back up to 11,634 would be possible for stop your line. If you are buying this, you could have your stop loss just below 11,175. And again, I reiterate, technicals are down. The government is buying bonds and causing a distortion in the bond market in Europe. Will stop me line. Spanish interest rates for the 10 years, instead of being 8 or 10% like they used to be a couple of years ago, they're now 1.5%. Full stop me line. There are some strange things in this world. Full stop me line. Euro stocks 50, new line. It's come down into the zone where we thought it might do, and it's reversed a little bit. It hasn't really broken up yet. That would be above 36.20, and that would become a buy looking for 3,700 and possibly new highs. Full stop, new line. Your stop loss if you were buying would be at 3,500. Full stop, new line. Again, a lot of these markets are coming into zones where you have buying opportunities. It's up to the markets to run away quicker than I have seen. Full stop, new line. So it's a buy with an element of doubt. Full stop, new line. UK FTSE, new line. I believe there's some sort of election in the UK and they say, oh, it's going to affect markets. And the reality is it's really done nothing at all. Full stop, new line. A break above 69.20 would yield to being bullish. Sorry, that was 70.20. And again, downright uninspiring charts that we have. Full stop, new line. Italian MIB, new line. This is the Ferrari Testarossa of the equities markets. It's certainly a bit stronger than the rest of Europe and should head towards 22,978, targeting also 23,399. Full stop, new line. If you are buying this, have a stop loss here at 22,300. Full stop, new line. Asian stock indices, new line. Shanghai A shares index, new line. China has a habit of doing things faster than I thought. Full stop, new line. It's actually got down to the target area I gave you yesterday pretty quickly. Full stop, new line. Any further down move is not that good really for what the Chinese government would like, and down to 37.50 is possible. Full stop, new line. Now, to the extent that young whippersnapper Chinese made lots and lots of money between February and April on the stock market, and then came out here and bought lots and lots of houses for lots and lots of prices, it might be disappointing if they see it crack below 4,300. 37.50 would be a wipeout for those people who are over leveraged in the stock market. Full stop, new line. Yin.ETF. Looking down towards $49.09, that would be a sensible place to pick it up with a tight stop at $48. Full stop, new line. Your expectation would be somewhere around about $56 on the first bite and $62.90 on the second bite. Full stop, new line. Japanese Nikkei, new line. The Japanese Nikkei has woken from its data slumber, full stop, new line, and reopened in our eyes, probably not the rest of the market's eyes, lower, slightly as expected, down towards 18,880 or 18,854, full stop, new line. Is the next target. Without quantitative easing, these markets don't go anywhere fast, do they? Full stop, new line. In fact, it's almost like when people put up for sale signs on their houses, one goes up, the one next door goes up, The one across the road goes up. Then there's a few other signs go up. And all of a sudden, you have collapsing prices without any sale transaction, as they both compete to drive it lower because they have too many houses to sell, full stop, new line. I think the Nikkei is in the same position at this point. It's a struggle street pattern. Everyone's used to the Bank of Japan coming out and the Ministry of Finance coming out and providing easy money, and it's not happening, full stop, new line. The same is true of the US. They still have low interest rates, but they don't have the real driver, which is government money coming into the system and making everything easier to deal with, full stop, new line. Europe has this, Japan no longer, the US no longer, and so those markets are under suspicion still for these reasons, full stop, new line. And to the extent that when a fund manager says, I'm bearish about the markets, and then they go, I'm going to go buy iron ore for security because the banks are falling, you have to be suspicious of what the overall market will do, full stop, new line. Cash is king in a market meltdown, if it happens, full stop, new line. Swapping between one risky asset to another risky asset, in the case of the materials index, is more risky, in my opinion, full stop, new line. Hong Kong Hang Seng, new line. This is suffering from Chinese malaise, full stop, new line. I thought Dragon would do that. It said Chinese malaise instead of malaise. If you know, get the Chinese Malaysian to tell you the joke. Anyway, it's early in the morning. The better target would be 26,712 now that Hong Kong has lost its Chinese luster, full stop, new line. Now, it is still incumbent upon us to find out where the bottom of this decline is in these Asian indices, because they will be good probably in October, full stop, new line. So we should be looking for China to bottom in October, full stop, new line. Australian share price index futures, new line. We have an inside day. We have a 50% retracement. Now, I'm not in love with 50% retracements, but I do see that it's sat on the old tops. And so getting above 56.73 would be bullish, and we should be looking to buy this, full stop, new line. At the moment, you can sell rallies towards 56.70 with a stop above 56.73 and reverse and go long if it gets above there, full stop, new line.